Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of business reports and tell you what it all means for your wallet. Today we're looking at ProFrac Holding Corp and a little update that happened in August 2025. It's not a huge shakeup, but it tells us something about how they're handling their finances and stock. ProFrac, as you might know, is a company involved in the oil and gas industry, specifically in providing well completion services. Think of them as the folks who help get oil and gas wells ready to produce. Now, this report is a little different because it's not a big quarterly earnings release, but rather an update about a specific financial event. Let's dive in and see what ProFrac has been up to. This report we're looking at is called a Form 8K. Think of this as a quick news bulletin from a company. It's used to announce major events that happen between their regular, more detailed financial reports. So when you see an 8K, it's usually because something important, but not necessarily market-shattering on its own, has occurred. The date we're looking at for the earliest event in this report is August 25, 2025. This is key because it tells us when the event we're about to discuss actually took place. This is ProFrac Holding Corp, the company we're focusing on. Knowing who the company is and that it's publicly traded is essential, as this report is filed with the US Securities and Exchange Commission, or SEC, to keep investors informed. Earlier, ProFrac had a public offering of its Class A common stock. This means they sold shares of their company to the public to raise money. Now, here's the crux of this 8K filing. On August 25, 2025, the people who initially bought these shares from ProFrac decided to buy even more. Specifically, they exercised something called an overallotment option. Essentially, this option allowed them to buy an extra 1,814,998 shares of ProFrac's Class A common stock. This is a common practice in stock offerings. It gives the underwriters, the banks helping sell the stock, a way to buy more shares if demand. Practice in stock offerings. It gives the underwriters, the banks helping sell the stock, a way to buy more shares if demand is high. What does this mean for ProFrac? They got a cash injection of about $7.1 million. This money comes from the extra shares that were sold because of that overallotment option. This is good news for the company as it provides more capital, which can be used for various business needs like paying off debt, investing in new equipment, or funding operations. The official paperwork and the actual transfer of these shares and money happened a couple of days later, on August 27, 2025. This is when the deal was finalized for this additional batch of shares. And here we see the signature of Stephen Scroggum, who holds some important legal and compliance roles at ProFrac. This shows that the company is officially acknowledging and reporting this event as required by law. So, what's the story here? ProFrac had a stock offering, and because investors were keen on buying their stock, or at least the underwriters believed there was enough demand, they exercised an option to buy more shares. This resulted in ProFrac receiving an additional $7.1 million. This event itself is relatively straightforward. It's a confirmation of strong demand for their stock at the time of the initial offering and during this secondary purchase window. For ProFrac, it's a positive, albeit not massive, boost in their cash reserves. It suggests market confidence in the company's prospects, at least enough for investors to want to hold more of their equity, or for the underwriters to want to hold more of their equity, or for the underwriters to want to hold more of their equity, or for the underwriters to commit to selling more shares. In the broader context of the oil and gas industry, companies like ProFrac often rely on such financing to manage their often capital-intensive operations. The ability to raise funds efficiently through stock offerings and the exercise of options is a good indicator of a company that needs working capital. It shows they're able to tap into the market effectively. Now, looking at this from a Warren Buffett style perspective, we want to see if this is a sign of sustainable strength or just a one-off event. The fact that the option was exercised suggests that demand was strong enough to make it profitable for the underwriters and attractive for the investors involved. This isn't like a company desperately needing cash and issuing shares at a discount. Instead, it indicates a healthy balance between supply and demand for their stock. The question for investors is always, what will ProFrac do with this extra cash? Will it be used to pay down debt, improve their service offerings, or perhaps acquire new technology? These are the things that will ultimately determine the long-term value of that $7.1 million, determine the long-term value of that $7.1 billion, determine the long-term value of that 7 deniably positive. In conclusion, ProFrac Holding Corp had a successful additional sale of its Class A common stock, bringing in approximately $7.1 million. This is a good sign of market confidence and provides the company with additional capital. It highlights their ability to leverage the stock market for funding, which is crucial in their industry. What's your take on this news from ProFrac? Do you think this extra cash will be put to good use, or does it signal something else? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more clear explanations of financial news. And definitely check out our Discord server in the description for more discussions and insights. Thanks for watching, and we'll see you in the next video.